Get some questions going.
Yep.
Loading up. Questions going.
Yep.
Be live. Let's get it.
La.
Yep.
Yeah.
Welcome back, everybody.
Yo, welcome to Stock Plug Investments, man. Where we talk about the stock market, man. Try to give as much free game as we can, man, so we all can all reach that goal of generational wealth, or at least create another income. You know what I mean? My goal is generational wealth, but you might just want to create some extra money. And that's what we're trying to teach y'all. You know what I mean? We want everybody to make it. We just here to educate, man. This is strictly entertainment, man. We are not financial advisors. You know what I mean?
Definitely not.
we definitely not, you know what I mean? But we do know what we talking about under this stock market stuff. So we just trying to share the knowledge for real. You know. Yeah, so you can see the title. You see the title, man. You know, so that's what we're gonna talk about today. Is it a possible stock market crash coming this year? You know, we got an opinion on that. We're gonna elaborate. You know what I mean? As of now, right now, we're just gonna do some questions, man. Anybody got some questions? Let us know. Let's try to get a few more people in here real quick. Send that out, man. Send this out. Share this with your friends. Let them know. Pull up, learn some information, man. It's a lot of new people in the stock market with no guidance. We trying to help give guidance.
For real.
Got any friends that's in the stock market and they don't really know what they're doing? Tell them to pull up. Like we invite all newcomers, man. We just want to let y'all know what we ain't know when we first started.
Right.
So we had an upper hand.
Y'all don't make that same mistakes we made, man.
Yeah.
I would have never sold Dogecoin, man.
There's a lot of stuff we would have did, bro. For real.
Man.
For real. And that's facts. That is facts, man. Let me get this chat box up so we can see.
We got a few people joining in. If y'all got any questions, y'all can ask us right quick before we get started.
Yeah, man. If you feel like you learned something in this video, man, we added some value to your if we added value in any way, you know what I mean? We told you something you ain't know, or you know what we saying makes sense, man. Make sure you like the video, man. Get your friend to subscribe to the video. You know what I mean? If you even if you watched the last video and you like that video and you just forgot to like this one. You know, go on here like this one. We want to get some traction, get this video out to as many people as possible, man, because this is real valuable information. And it's free.
Yeah, for real.
It's for free. You know what I mean? We're gonna tell y'all the stuff that the people on Bloomberg ain't gonna tell you.
Right.
Because they gonna tell you one thing and smack you upside the head a little later. Like
right.
It's real, man. So we're gonna give y'all the straight drop, man. They gonna mix it with some other stuff and sell you that garbage. We're gonna give you that straight pure. This is what's happening, man. This is what's happening. We want everybody to be on point. So if you got any questions, let us know. You got some friends, send this out to them, man. Tell them to pull up. We definitely down to answer all questions. For sure. I'm trying to send this out, y'all, right now. Don't mind me, man. I'm trying to get some more people in here. But we got a lot to talk about today, man. We didn't record yesterday. We've been busy this week. Me and bro got a busy week this week. So we ain't get to go live yesterday. So we definitely gonna bless y'all today, man. We're gonna really give y'all y'all money's worth, even though y'all ain't paying that.
Right.
Yeah, I mean,
hey, time.
For real, yes, your time worth.
Time is money.
Time is money. So we're gonna make worth it. You know what I mean? You sit down and watch this whole video, you're gonna learn a lot. Sure. You know what I mean? It's gonna make you want to tap into the next one for sure, man, because we got a lot of game, man. Today we're gonna touch on a few things, you know, some of the stuff you should do if there is a market crash. You know what I mean? How to maneuver in them situations.
How the people market crash when it's happening before it
Yeah.
happens.
Yes, that's important because a lot of stuff in the stock market happens based off of history. So if it happened before, it's likely to happen again, just like they say in history class. You know what I mean? History repeats itself. And it's the same thing in the stock market. And that's why you can rely on support and resistance lines because they date back to the past. They go all the way back, and the same stock been respecting them same support and resistance lines.
Right.
So that's why support and resistance is going off of past patterns. What happened in the past? This stock stopped at this line in the past. Let me see if it do it again. And majority of the time, it's going to do that.
Yeah.
Majority of the time, it's going to do that. So that's all support and resistance is, going off of the past patterns. You know what I mean? And it's the same thing with market crash and corrections. Like, it follows a pattern. So ain't nothing for show, ain't nothing guaranteed. Every day is unique in the market. But if it's starting to line up like it did when it went bad last time, it's a higher percentage. It's a higher chance that it's gonna do the same thing. You know what I mean? Ain't nothing guaranteed, but it's definitely a higher chance it's gonna do what it did in the past. So if we don't got no questions, let us know. We you got the chat box put up, bro?
Yeah, I gotta pull it up.
Okay. Cause I don't
Nobody asked no question.
All right, just making sure.
You want to start off with the averaging down or the correction?
Let's get into the correction first. Let's get into the correction. Yeah. Okay. You know what I mean, so as we said before, the market never just go up. Nothing to the moon. Ain't nothing just gonna go to the moon. I know that's a good saying. Everybody left it. You know what I mean?
Hey, maybe cryptocurrency.
Yes. Goes to the moon. That's their favorite line. Nothing ever does that, bro. The stock gotta take a cool down period. Like, it just can't keep running. It gotta take a break. You know what I mean? And essentially, that's what a correction is. A market correction is just the stock, a certain stock, or the market itself as a whole taking a break. So it'll be running up, hitting all-time highs, 52-week highs. You know what I mean? It's been doing this for weeks. Then it got to cool off. It got to take a little break. You know what I mean? Like an athlete. You know what I mean? You run 3 miles, you still need to take a break so you can do the next 3 miles. Or, you know what I mean? And that's what the market doing. So a correction is just when it fall. Well, go ahead, give him definition, bro. I'll get into that.
You got the proper definition, then bro can sum it up. Okay, so correction say in investing, a correction is a decline 10% or more in the price of a security from its recent peak. So like bro was saying, don't just continue to run, it's gonna eventually fall. Let me continue. Say corrections can happen to individual assets, like an individual stock or bond or index measured a group of assets. We told y'all what the what index funds was, probably like in the second video, was it?
Yep.
Yeah, we told y'all what that was. And like they were saying, like individual assets like gold, silver, nothing just continue to keep running up. It's always gonna have a correction to it. So yeah, that's basically what a correction is, a decline of 10% or more. Right now, the stock market is starting to see a correction. I don't know if it dropped down 10% or more, but it's looking crazy, man.
Yeah. A lot of the top ETFs like the NASDAQ, Dow, and the S&P 500, they've been down for like 3 days in a row. For real.
They are trending down.
You know what I mean, so it's starting to get into correction territory.
Yeah.
Correction is only 10% decrease, pullback. You know what I mean? And then there's more when they start getting out of hand and they get past like 10 and 20%. That's when we reach another level. But a correction ain't nothing wrong with a correction. That's like when you hear people say buy the dip, this is that. You know what I mean? A correction. The stock could be running up, hitting 52-week highs. Then take a little dip off. You know what I mean? Drop a little bit. You buy that when it drop, then it keep running again. Right. You know what I mean? Corrections is healthy. Ain't nothing wrong with that. We buy the dip on those and we ride through those. You know what I mean? You can even swing trade a correction.
Yeah.
You know? So corrections is cool. 10%. So we can go run 20 more percent. That's cool. We're gonna do that all day. And that happens more than that happens roughly like, I mean, it really on average 2 to 4 times a year.
Yeah,
I
and
mean,
let them know what that's called.
okay, yeah. So well, it happens, it can happen more than that for sure. Definitely can happen more than that, but on average, it definitely happened like, you know, 3 to 4 times, I mean, a year. And usually that's due to witching, witching period. You know what I mean? Quadruple witching and all that. That's all that is when people that trade options, it's a certain date every year that certain contracts expire. So the people that had made money for a whole 3 months or a whole year, it's time for them to sell theirs and collect their profits because they expiration date coming up and their contract about to expire. And this happens on the same day 4 times a year. It happened in March, June, I think September and December.
Yeah.
Yep, September and December. I got a calendar for this year. I'm gonna post it on the page so y'all can like see it on there. But quadruple witching, the stock is always gonna fall during quadruple witching because people selling and they taking their profits. So it gotta take a break because people selling. You know what I mean? The stock go down when people sell. So if a lot of people that got money and they got in when it was cheap, they bought the dip already. You know what I mean? And then it ran up for 2 months. Oh yeah, quadruple witching coming up. Let me sell these, take this profits, and do it again. And the stock gonna fall down, and then start buying the contracts again when it's at the bottom. They're gonna buy that dip, and it's gonna run up again. And you can do that with stocks too. So that happened every 3 months. That's called witching, quadruple witching, and witching period. So that we're gonna touch on that a lot more for sure because that's important. Like witching is coming up in June. So that is probably why this market looking like this. People about to start selling their contracts. You usually sell your contracts a couple weeks before witching.
Yeah.
You know what I mean? Because you want to have some time on your contract.
Right.
So the market could be reacting to that coming up next month.
And it's a lot. It's a lot, man, that the market really reacting to with the gas and
yes.
It's market, a lot, man.
But the market is crazy. The market is crazy, man. Oh yeah, that's what a correction is. Yeah. That's what a correction is, man. A little 10% dip in the stocks. Like it's doing the 52-week highs running up. All right, let me take a little break, fall down 10%, then I'm gonna keep running again. We buy those dips for sure. You know what I mean? We buy those.
So that was what a correction was. We about to move on to the proper definition of stock market crash, so y'all can have a full understanding of that.
Right.
And, really, well, yeah, you can sum it up. I'm still reading. Let me go ahead. So stock market crash says stock market crash is a rapid and often, unanticipated drop in stock price. A stock market crash can be a side effect of a major catastrophic event, economic crisis, or a collapse of a long-term speculative bubble. So, well, let me keep going. I'm gonna let you do it. It's a reactionary public panic about a stock market crash can also be a major contributor to it, including panic selling that depresses prices even further. So yeah, bro, go ahead and sum that up for them.
Right. So in layman's terms, a stock market crash is like what happened in March last year.
Yeah, and it can be like different.
Yeah, I mean, it was just out of nowhere. It was like March 23rd hit, the stock dropped. Like everything was down. Like 20%. Like everything was down 20%. That was major. And that wasn't even really a crash. That was like borderline crash, borderline correction.
Right.
Like it was bad, but it, you know what I mean? It could have been way worse. It could have been way worse. You know what I mean? but it's just so it's rapid. It's like sudden. It's just like out of nowhere, and it could be like, last year was mainly due to the pandemic. You know what I mean? The virus hit the U.S. It started being all them death, a lot of stuff shut down. You know
Yeah,
what I mean? Major
that's
stuff
that's
happening.
like an example of economic crisis and catastrophic event, like they were saying in
Exactly.
the definition. Like,
Exactly.
so yeah,
Yep. And stuff like that. And then people being scared or fearful that something about to happen. I was listening to CNBC today, and the old man was on there. I forget his name, and he was saying like he was alive and trading during the 2001 market crash or 2000 market crash.
.com
And
boom.
yeah, .com boom. And he was saying like a lot of that had to do with people being worried about Y2K. You
Yeah.
you a little young, bro, so you probably don't know what Y2K is, bro. Bro, look,
I think I might,
bro,
let
look,
me
man.
hear.
There's time about the world was gonna end in 2000, bro. Like
Oh
all
yeah.
the computers gonna start working, all
Wow.
that, all of that fear, it start making people sell and stuff. You know what I mean?
Wow.
And all of
I
these,
thought it was because of the speculative bubble, basically, because all of the stocks ran up because they had websites, all of the websites
that
started
too,
booming. And that's
that
what I
too,
thought it was for, the
that too.
speculative bubble.
That played a part in it. And he was saying, like, you know what I mean? All them stocks, all them companies that was joining and what the .com boom, they
Right.
was running up and people was buying, and there was a lot of people in the market. But
Yeah.
then people start being fearful that the computers was gonna stop working when Y2K hit.
Right. Yeah.
You know
Okay.
what I mean? So
Yeah.
I
Yeah.
don't know, like that's what he said, but that can be like some speculative bubble. You know what I
Yeah.
mean? People scared something about to happen, so everybody just starts selling. You know what I
Mhm.
mean? And that can definitely cause a market crash. Definitely cause a market crash. And market crash is really like a 30%
Right.
decrease.
Yeah. I don't know why they ain't said it in here.
Yeah,
So
they're
like,
supposed to put that in there. It's
yeah,
really like 25,
30.
30% decrease from a 52-week. It could be a stock, but no, a market crash, that's usually related to like
S and
ETFs and
P.
stuff. Yeah,
Yeah. S and
S&P,
P 500.
NASDAQs, and Dow
Yeah.
Jones,
And that's like
stuff
the
that represent
that's
the
like the
whole market.
overall market. Yeah.
There you go. Exactly.
Yeah.
Exactly, bro. Yeah, exactly. And since we're talking about it, you know, it's looking like we might be heading into another crash, boy. You see
Yeah.
stuff now, like um. So I did some research on one of the worst crash that ever happened in the stock market, which was in 1929. I think it was called the Great Market Crash or something like that. And bro, that was like the worst crash that ever happened.
Mm.
And a lot of stuff that happened then is happening right now. History repeating
Yeah.
itself.
Yeah.
Back
Yeah. Because we definitely was in a bubble for the past 10 years, right?
we was
Like,
in the bull market for the past 10.
well, yeah. Bull
Yeah,
market basically
yeah,
leading into a bubble, like something
yep,
gonna happen
yep.
to where everything gonna collapse.
Exactly, bro. And one thing, another statistics on market crashes and like recessions and stuff is they happen like every 7 years on average.
Right.
You know what I mean? 7 to 10 years on average, it's going to happen. You know what I mean? It happened in 2000, then it happened again in 2008. Then
Yeah.
you know what I mean? Then it just happened last year. You know what I mean? Like 7 to 10 years, we do for one.
Yeah.
You know what I
Yeah.
mean? And who's to say it ain't over yet? You know what I
Man,
mean? A
I
lot
honestly
going
don't
on.
think it's over, man, because all stocks rebounded so fast like
Yes.
that. With
Yes.
all of the new investors in, man, I feel
Yes.
like we in another bubble right now.
Yes. I believe that too. And just because you mentioned that, you're right, bro. Like in my research, it was saying that in 1929, when they had that real bad, the great crash or whatever,
Yeah.
that it was more people in the stock market than ever. Like
Yeah.
people was greedy. People was just like, oh, I can make money in the stock market. Let me go do it. People
Mhm.
that ain't know nothing about the stock market. Don't that look like today?
Mhm.
You know what I mean? Everybody mama in the stock market, everybody, brother, sister, uncle, people that never even looked at a stock is in the stock market, bro.
Yep. That.
Just one thing that looked just like then.
Uh-huh.
it's like 3, 4 other factors. You know what I mean? And this can be one of the worst ones due to like how we had to recover from last year.
Yeah.
You know what I mean? Like all the stuff we had to do to bring us back from last year,
Yeah.
we spared no expense.
Yeah.
And you see how much debt we racked up trying to do it.
It's all about to catch up.
It's about to catch up. If it happened again and it get worse, bro, I don't where how they gonna be able to stop the bleeding this time?
Man, you can't just keep pouring money into the economy.
That,
Gonna have to raise prices on gas. Like really, it probably was all a fake with the hackers going into the Colonial Pipeline and all that. They just want to raise gas prices. Like honestly, like really, like they need their money back. Like they gave you all this money, they're gonna have to get it back somehow. Like, and especially with the stock market, man, so many different factors, man, to this crash.
That's facts, man. It's so crazy out here, man. I don't think people be knowing, man. Like a lot of people is new investors, bro, and they don't got a clue what's going on.
Right.
They might be making money, but they still don't know what's going on for real. They just, trying their hand. And right now, a bad time to be trying your hand for real, because right now you can get your hand chopped off for real the way it's looking, man. I don't want it to happen to nobody I know for sure.
Right. Instead of gambling, do your research, man.
That's important.
Don't make it a gamble. Make it an investment, not a gamble.
There you go. And yeah, doing your research will definitely help with that, man. Definitely help with that. Let's talk about what you could do if there's a market crash. You know what I mean?
Yeah.
And you took our advice that we said in like the first 2 videos. You buy your position and you go long. You know what I mean? You buy a stock and you intend to hold it for 5 years. You intend to hold it for 10 years, 20 years, because you see the growth potential in it. You know what I mean? You did your research. You found out, oh, well, this probably about to happen in the next few years. Let me put some money there and let it happen. You know what I mean? And say you get in at a bad time and then the market crash. You know what I mean? A lot of people would, sell their shares or whatever and take the L or whatever. But if you still got faith in this company and you feel like what you did all your research on and it makes sense and it's probably still gonna happen, you got faith, the next thing you do is you average down.
Yeah.
You know what I mean? So let's talk about averaging down, because this is how people turn a loss to a win. Go ahead, tell them what that is, bro. They got a definition for it?
Yeah. This the Google definition. I'm gonna go ahead and read it. And you could sum it up. But say averaging down is an investing strategy that involves a stock owner purchasing additional shares of a previously intended investment after the price has dropped. The result of this second purchase is a decrease in the average price at which the investor purchased the stock. So yeah, go ahead and sum that up for them so they can understand what averaging down is.
Okay, then.
Stock and it go down.
Right. So averaging down is like, it's basically just playing the game of averages. You know
like get them an example if you like on something.
A smooth example would be, say I buy a stock at $10. I'm like, all right, let me buy the stock at $10. I'm gonna hold it for 10 years. You know what I mean? Catch that wave all the way to 100. I buy it at $10. I only buy one share. You know what I mean? It's my initial investment. I only spend $10 on one share. This is a small example, but this works on a bigger scale too. I spend $10 on one share. Say a week or two later, the stock dropped all the way to $5. You lose half your bread. It dropped all the way to $5. What you do then is, all right, well, I ain't go full position anyways. I got some more money because I still believe that this stock got good potential and it's going to run up in the future.
Right, you're planning on hold it for a long time.
Yeah, so let me get some more while it's down. Let me catch this sale.
Right.
This is a sale. Like, Gucci don't do sales. You ain't gonna catch no sale on Gucci, but
Right.
you know what I mean? When you go to the store and you buy something, you be like, oh, that's on sale. I want that. This is the same thing. It's on sale right now because you see the potential in it. So now instead of $5, let me throw some more money in there. Now let me pay $20 and let me get 4 more shares for $20. So now I paid a total of $30 in there. The $10 initially, and I just paid $20 more. But I got 5 shares for that. I got 5 shares.
And what would that bring your initial cost to?
So now to figure out the average, all you do is the total of that you spend for all the shares divided by how many shares it is. So you spend $30 for the shares and you got 5 shares. So 30 divided by 5, about $6. So now your average cost is $6. So now that the stock at $5, which cost is $6, as soon as the stock hits $6, you broke even. You broke even. You not down no more money. And once it go to $7, you up $1 per share. So you got 5. You got 5 shares. So now you up $5. And every dollar after that, you up more. So that's how you average down if you got faith in your play or whatever, or a stock, and you hold it for the long term. You average down. So now the cost that you pay for your total amount of shares is cheaper. So when you do go up from where it's at, you start making money much faster rather than paying for it to get back to $10.
That's what I do on my dividend stocks. Whenever it dropped down, like today, I had bought in on a lot of dividend stocks, SPHD. I bought in on a few more, but you just average down on them, and you still getting that monthly or quarterly payment from the company. You just averaging down, so whenever the stock go back up, you'll be winning on the stock and still getting those monthly or quarterly dividends.
Right, bro.
Averaging down is real good in a market crash, especially if you planning on holding it for a long time. Go ahead and average down and get your average cost down. And once it start going back up, then you'll start making money. That's why we don't never go all in on the stock. You always supposed to have some buying power on the side.
Yep.
So when you see a good deal like that in the stock market, you can go ahead and execute, and long term you'll be winning.
Let me get that. Just like, man, bro, we giving too much, bro. We giving the game, bro. Yeah. I'm telling you, hey, man, like this video, bro. Like, who telling you all this stuff, bro? Like, you know what I mean? Like, if you ain't never heard that information before, like this video. You know what I mean? Subscribe to the channel because we got a lot more of this, man. We're going to give y'all the game, man. We missed class yesterday, man. We're going to really do it up today, man. We're going to do it up for sure, man. So the title of the video is there going to be a market crash? Hey,
right now
it's looking real.
The way it's looking, man. Just let them know what this is right here.
Oh, okay. So before I get into that, bro, let me a story real quick. So one of the rules in investing is follow your, like, if you believe something, you know what I mean, you got a hunch or you did your research and something makes sense, stick to your guns, you know what I mean? Especially if you got time to do it. So I say that to say this, that last year before the market crash, right? I was trading, I was up or whatever, and I was just sitting there. I'm like, you know what? When was the last recession? Like, when was the last market crash? And then instantly I did some research. Like, instantly I did research. This was like December, not last year, but the year before that. And I'm like, oh, so the last market crash was in 2018. I'm like, well, let me look up some statistics on the market crash. Looked up some statistics. They like, well, it usually happen every 7 to 10 years.
Right.
I'm like, whoa, so if it happened in 2008 and it's 2019, bro, we due for one. Bro, God, that day I pulled all my money out the market. I sold everything. And a lot of the stuff I sold kept running. Yeah. And I'm like, hey, man, son told me sell it, boom, boom, boom. March come around and everything falls. I got all my buying power because something told me to just sell. You know what I mean? I did a little research. Oh, it happened it usually happened every 17 years. We overdue for one. Let me not wait for it. Let me get out now. I pulled my bread. It hit 3 months later. And I tell you, I had all my bread to buy anything at the bottom. Let's go. Triple my bag in no time. You know what I mean? So if you feel something, man, sometimes you just gotta act on it. Sometimes you gotta act on it. Do your
Go with
research.
your gut, man.
Yeah, for
Go
real.
with your gut.
For real. So yeah, what Brett got pulled up is can you scroll up? Like, do they got the image of it? Let's go to the image.
Oh yeah.
Yeah. They need to see that. So right here is what we call the fear and greed index. This is a good indicator of how the market is feeling. And all you got to do to find this is just you can Google it, fear and greed index. You know what I mean? It's gonna pop straight up, take you to this website. But all this is telling you like if the majority of the market is fearful or is the majority of the market greedy. You know what I mean? Is people like pressed to make a bag, or is a lot of people making money and they getting greedy and they not selling? And that's what greed would be. And fear would be, oh, people scared, like it's getting ugly out here, like it's a sell-off type stuff. That's what fear is. So as you can see, this is today's, right? Yeah, this today. And right now right now we heading to a fearful point. You know what I mean? A lot of people starting to sell. A lot of people starting to realize, like, you know what I mean? It ain't been that 52-week highs again. Like, a lot of stuff been falling the past month for real. Even if, you know what I mean? Even if
I just been averaging down. I'm long term. I'm long term.
Give me that.
How you do it, man?
We averaging down on them shares, man. And if we got long-term contracts, we're doing the same thing, you know. But yeah, so right now the market is starting to get fearful. But if you was looking at this same fear and greed index, say 2 months ago, maybe even January, bro, it was big greedy.
Yeah.
Big greedy, bro. People, everybody and their mommy in the market, they, you know what I mean? Or even when Dogecoin popped, it was big greed.
Mm-hmm.
That meter was all the way on green, man. And a cardinal rule with investing is, you know, you buy when people are fearful, you sell when they greedy. Mm-hmm. You know what I mean? When everybody think like it's sweet, I can't lose on this play, you get out the way. You know what I mean? You let them prove themselves wrong. You don't find out the hard way, bro. Everybody is being too greedy. Don't be greedy and get slaughtered. Because you know kids get slaughtered. You know what I mean? You hear that as a kid, you hear that on TV. That's a fact. And it's the same thing in the market. You get greedy, you're going to lose. You're going to get slaughtered. And on the fearful side, you know what I mean? When everybody's scared and everybody done sold, that's when you get greedy. Mm-hmm. That's when you catch the sale. You know what I mean? You ever heard the saying, save your money for when it's blood in the street, or
save money for a rainy day.
Save for a rainy day, or you buy everything when there's streets. You know what I mean? Essentially saying like when it's all bad and everybody's scared, if you got your bag, you got a nice bag, that's when you start buying stuff. You start buying properties, you start buying stocks, you start buying stuff at a discount.
Catching it all on sale.
Yeah, we catching these sales, bro. Yeah. You know what I mean? When the market crashed in 2008 and everybody's house value dropped 100K and people was losing their crib, guess who came through and bought all that? The millionaires, the billionaires. Mm-hmm. They bought it at a discount.
Yeah, JP Morgan, really?
Yeah.
I mean, the story about them, man.
Let me get all that.
Morgan eating.
Really? Let me get all that. They caught it at a discount, man. So when they fearful, when they done sold everything and they scared, and oh yeah, I got faith in what I know and what I'm doing. Let me start buying. Let me start putting my bread out there now, so I can catch the come up. You know what I mean? I bought the dip. It fell. I know what it's about to do though. It ain't doing it yet, so I'm gonna buy it right now and wait for that move. You know what I mean? Yeah, that's this is a good indicator, man. Fear and greed, man. You know what I mean? That's important. You should definitely follow this rule, man, because this will tell you if like the market greedy. And if the market greedy, something ugly about to happen. Don't get caught up. Don't get caught up. And right now it's getting fearful. So right now the time to have your money in the cut, waiting for it to hit the bottom.
Or averaging down.
Or averaging down. You know what I mean?
Yeah.
And
depending on what's your investment strategy on something. That's my strategy long term.
Yeah.
Your strategy might be different. You might want to wait to a 52-week low or something like that to buy in on a stock.
Right. But that's hard to hit that. It's hard to hit that 52-week low.
Yeah.
But
waiting on a resistance, I mean, or support rather.
Yeah, but we can I can put us and like show like some examples of averaging down or buying a dip, and you know what I mean, if it's like a market crash and you had it at the top where you can sell it at the or when you start buying at the bottom, or a good strategy for averaging down. Because you don't want to just average down every day, like unless you got the bag to keep doing it.
Right.
But if the stock was at $100 and you bought it, you can decide like, all right, if it start falling, I'm gonna buy some more at $80.
Yeah.
That's a 20% dip.
Yeah.
You know what I mean? That's an average correction. We're gonna buy that at $20. Or first you would do 10. You would do 10%. Yeah. So if you bought it at 100, you would let it fall 10% because that's an average correction. You know what I mean? 10%, like we said. So at $90, let me get a little more. You know what I mean? Then if it keep falling and it hit $80, that's 20%. You starting to reach like close to borderline bear market or crash. So we're gonna buy a little bit here too. So then if it keep falling, all right, now it's a crash.
Yeah.
Go so all in. Instead of buying $10 down, we're gonna wait till it hit like $60.
Right. Yeah.
And then we're gonna buy some more. Now we getting about half off.
Right.
You know I mean, if it keep going after that, we loading the boat. If it go down to $40, we getting more. If it go down to $20, you didn't put enough money into it by now.
Right. You gotta start looking at it.
Yeah, let's see if it's gonna turn around. Let's see if that trick gonna turn around, man. Cause you know what I mean. But that's when you do your most research, though. That's when you start looking like, okay, was my theory making sense when I first came up with it? Right. And you find information to support you and be like, man, how do I know what I'm talking about? This is just the market tripping.
Right.
You know what I mean? It's still gonna happen. It just ain't happening yet.
Right.
And when you got that conviction, you can ride out that down, you know, that crash. Mm-hmm. And you can still make money on the back end. You just got to be patient for it. You know, because stocks don't expire as long as the company don't go to zero. You know what I mean? Stocks don't expire. Yeah, a company can file bankruptcy and still be on the stock market.
Yeah. A lot of companies filed bankruptcy last year. A lot of airline companies.
Still on the stock market, still thriving, still getting bread. You know what I mean? So long as the stock don't go to zero, man, doing that, and you got conviction, man. Hey, hold on to it. Keep doing your research, man. Keep doing your research. Oh, okay. That's what's up, James Porter. What's up, man? What's up? Yeah. So, these right here, these just let me zoom in so I can see that a little better. These right here is just like different indicators for the fear and greed meter. You know, we got the volatility, that's pretty important. You know what I mean? We got the what's that, market momentum? Yeah, market momentum.
Oh man, my fault.
Yeah, and yeah, because I got two screens pulled up. I'm still trying to make sure I see the comments, but there we go. Yeah, so we got the market volatility. That's kind of important. You see, that's extreme fear. People fearful of the volatility, how much the stock is moving up.
I've been fearful at the beginning of the pandemic. You know, they moved back up 10% after the crash. I'm like,
immediately.
How? How? And that happened within 1 month. Like, yeah. I didn't know what to do. I held all my money into the election. I didn't know what to do. And I feel like that was the right time to buy in.
It wasn't bad. You know what I mean? It wasn't horrible. You know what I mean? You missed a nice bull run, boy.
Yeah, I definitely did, but I ain't know what to expect.
I know, man.
That ain't the type of investor I am. A lot of people cut their dividends. I ain't know what to do. You know what I'm saying?
Right. Hey, and that's why we always say, bruh, time in the stock market is better than trying to time the stock market.
Yeah, that's Warren Buffett quote right there. Yeah, time in the stock market is better than trying to time in the stock market.
Exactly. Like you learned in that process. You seen like a big correction, and you can be like, oh well, if this happened again, I know what I could do different now. I know what I can look for to see if it's doing this. You know what I mean? So you want to be in the market to experience all of that. You need to experience all of that. You know, and so yeah, market volatility is just like how fast a stock or how big the swing is in the stock price. So if they moving a lot like Tesla's real volatile.
Man, you know GameStop.
Bruh. Oh, GameStop.
GameStop, man. Oh my gosh. That is the most volatile stock ever in history.
2020 for sure. 2020 for sure, man. If somebody asks 20 years from now, what stock would you buy in 2020? GameStop, bro.
Right.
Somebody bought some of that, bro. Like it was so volatile. It went from $3 to $13 to $30 to $200 in like 1 week.
Yes, and then the next week it went to like 500. It was stupid, man.
That's big volatile, bro. Stocks don't move like that, man.
Could have literally turned like 200 into like 50 bands.
A lot of people did, man. Or not I can say a lot, but
not a lot. But if you was if you had a little contract at $3 and bought a little contract and it ran up $500,
right?
You would have definitely made like $50,000.
I'm telling you, bro, man.
Crazy stuff. Man.
Last year was a crazy year in the market, bro, and it's kind of setting it up for a crash.
Yeah,
because usually when it's a crash, it's a lot of crazy stuff.
Different stuff going on, man, and
stuff that don't
do your research.
Yeah, a lot of
in the chat, man. Y'all doing y'all research, y'all tapping in, learning something. Like a lot of people don't know this information, man. We trying to get it out there, man.
It's valuable. It's valuable.
Real.
You know what I mean? When I was doing my research on that big market crash in 1929, bro. Yeah. Like I got a video I want to post. I'm gonna post this video on my page so y'all can watch it, man. It's good. It's real valuable information. But they were saying like back then, a lot of crazy stuff was happening in the market that don't usually happen. Like it was just like crazy bull runs, and like bull runs just mean like the stock is just going up.
They keep going,
keep running up. That's a bull run. And the bear market is like when it's going down, which we might be experiencing right now. But they were saying like a lot of stuff that don't usually happen in the market was happening that year or the year before. And that's what's happening right now. Like if you look back, ain't no stocks doing what GameStop did. Like, I don't know when the last time that happened, bro. Like,
right. I'm thinking it never happened. Like the Wall Street bet set it up right. They knew if they get enough people to invest in this stock, it's gonna go up. Make the hedge funds have to buy more shares, and that's gonna make it go up even more. So it's just a nonstop cycle. They was planning on it going up to like 1,000. Like it wasn't no 400-500. They planned on like really Robinhood messed it up by not allowing people to buy more contracts. Really, so that was the reason why. For real, it would have kept running.
Yeah, hey man, we giving game, man. Like this video, man. Subscribe to the channel, man. Go ahead, share this with somebody, man. We're gonna go in a little longer, man, because we ain't record yesterday like we intended to. You know what I mean? We're not gonna record tomorrow. We got a busy week, but we definitely coming live to y'all on Sunday for Money Talk Sunday.
Yeah. A lot of personal finance, man, on there.
A lot of game.
Learn how to budget and still be able to do what you want to do. You know what I'm saying? Still be able to invest and make passive income.
Yep.
Touch up on all that.
Facts, man. Money Talk Sunday is gonna be lit, man. We're gonna have a lot of gems for y'all, man. And we're gonna stick to that. We probably do that like a Sunday, like Money Talk Sunday, and we're gonna talk about money, man. Like it ain't gonna always be about the stocks. It's gonna be about how to get your money right so you can invest in stocks.
Right, yeah, exactly.
You know what I mean? Because I was forgetting, like, I could teach you to all day. You can learn this all day, but if you can't figure out how to keep some money in your pocket
Right.
that you don't need to
Right.
invest in the stock market, then you really can't get in. You know what I mean? Like, because people be trying to get in, hit a quick lick, make $100, make $1,000, and get back.
It's
That's
definitely possible, but you gotta
it's
know
possible.
that knowledge. We teaching
Gotta
that
know.
knowledge. You can plug yourself, man, for real.
You can
When it comes
definitely
to the stock market, you can be whatever type of investor you want to be, whatever strategy you want to use. Like, we teaching all different strategies. Me and Bruh strategy completely different on some, but we both eating on some because we got the knowledge. So
Thanks.
yeah.
And son, a lot of people don't know, or a lot of beginners don't know, is you can make money in the stock market when the stocks is falling, bro.
Yeah, most definitely.
Yeah, I mean,
time in here.
You can still make money. It can go up or down, and you can make money, bro. We know how to do that. We're gonna show y'all how to do that. You know what I mean? That's a little more complex, a little more risky, but it can be done. It definitely can be done, man. And that's another strategy. When last year when the market crashed, crude oil.
Yeah, I had a question for.
That's a good question, bro.
Well, you can go first, and I'm gonna get my opinion on it.
Okay, so I'm gonna tell you right now, I ain't really did much research into the oil. No cap. I ain't even gonna like recommend nothing because I ain't did my research yet. So I don't want to be the blind leading the blind. I ain't even gonna do like that. But I will tell you, bro, I will do some research and I could chop it up with you tonight about it. Yeah, I know. I'll pull up on you and we could talk that. You know what I mean? So yeah, that's my take. What you got, bro?
Really with the oil stocks and the gas stocks right now, for me, I'm not even about to worry about because I'm young and I still got time. So I feel like in the next 10 years, EV gonna start taking over. So there's not no point in me even trying to do my research on oil and stuff that's messing up the the earth, you know what I'm saying, with the carbon emissions and all that. So I'm really not worried about that. I'm more investing into EV and clean energy stocks on something. But
okay, bro. So let me give you a little game too, bro, real quick. So I'm assuming that the reason why you asking that is because of the news that's out about the gas and all that, right? So I'm gonna tell you right now, when they report stuff on the news about stuff like that, the stock already made. You know what I mean? So when that news hit that it's gonna be a shortage and all that, the stock was it probably already ran up from that news. Like people start buying it as soon as they seen it or whatever, or the people that did their research ahead of time, they was already in it. So they run up and they sold it at the top. You know what I mean? It probably is running a little more, but it ain't gonna keep running. You know what I mean? So a cardinal rule with like once a cardinal rule with trading is you buy the rumor and you sell the news.
Yeah.
You know what I mean? So
you wasn't already in oil. Damn.
You know what I mean? Exactly. If you're trying to do a short-term play, I can't really guide you with that, bro, because the news already broke. The money already been made on it. It might be a little bit more, but you risking a lot to hit that little bit.
Some supported resistance, maybe some different indicators. You probably can make a little flip, but who knows with all of the news out? Who knows what can happen?
It'll be short term, but we recommend all beginners go long, man. We want long-term stuff. But if you really think that crude oil is the future and that it's gonna be big in the future, and you did your research there, bet we can talk and I sit down with you and you let me know what's up and we can find together with some good ways to invest in crude oil. But what I see for the future in 5 years is EV, bro.
Yeah,
at least
probably not even 5, probably about 10.
Yeah,
probably solid 10. I say 5% of the US gonna be EV. The US vehicles on the road.
I think it's gonna be more about 10 years.
No, I'm saying a solid 5%. Like right now, and it's only like 1 or something like that. Like, so it's gonna take some time for more manufacturers to make cars, and because like Tesla on top right now, but it's gonna have to be like a cheaper version of EVs from another company.
Nikola something Nikola EV ain't that hydrogen?
Or Nikola. Yeah, that's hydrogen. Well, you can say it's EV. it's clean energy, so you can put that in the EV category. So I'm real bullish on Nikola for the next 10 years, man.
Yeah,
They ain't trying to just make regular vehicles. Like they going after the diesel industry.
right.
Like, and they put a lot of carbon emissions out. You got another question?
No, yeah, I was about to ask him. Like, I don't want to, without putting out too much information. I'm trying to see what you mean by offering that benefit. What your company offering that benefit? What they offering to
Oh, probably
like buy stock in crude oil? Like,
yeah, probably.
that'd be hard.
UPS used
If that's the
to
case.
did me like that. They say if I stay like for a certain amount of years, they'll start giving me shares of the company.
Okay, so if that's the case, bro, yeah, we dig down and we can find a good crude oil company and
Yeah.
look at some balance sheets and look at some price to book ratios and all that. I definitely do all that with you, big dog, and show you how to do it so you can do it yourself. So yeah, we definitely you just text me, bro, and we definitely can sit down and do that. That's nothing. I'll show you all that, big dog, for sure.
That's solid though. Job offering shares. That's
Right.
something right there. I'll take it regardless. Like rather regardless, I'll take it. Like real.
What, bro? Did you say something about
Oh yeah. I'm in Volvo. I got shares for the long term. I heard they about to go fully EV by 2030 on some. They trying to go fully EV. So yeah, I'm bullish on Volvo too.
Yeah.
They paid a huge dividend too, my biggest dividend ever. Like they only paid once a year. That's why it was like the dividend was so large like that. But yeah, they paid good dividends for the long term. And I think the share probably still like around $20 or something like that. So it's a good buy for Volvo, I feel like. That's another question.
Yeah, exactly. And yeah, because they definitely committed to all EV. Yeah, what I mean, and it's more companies doing it. You see Ford going EV. Yeah, I mean, almost every now know they got to ride the wave now. Like, even if you don't go your full fleet EV, you got to get in the game.
Yeah, so
you got to come out with an EV.
And like really, I feel like most companies just about to compete on who can make the cheapest model of a EV. Like, because it's so expensive right now to get an electric car because of the components and everything that they gotta do to even build it. But once that becomes cheaper, like them companies really gonna start fighting to get the cheapest EV out there, man. That's what's gonna really drive up more people to buy EVs. And companies like Plug Power, Charge Point, all these different companies that's gonna charge the cars, them gonna eat, man. I'm telling y'all.
Yeah. Really. And that's why I was saying I don't think it's gonna take 10 years, bro.
Yeah.
Kathy Woods, I follow Kathy Woods, and
she had a prediction on it. I need to hear this.
So look, she did a data analysis and basically ran, I believe it's called like a regression.
Right.
It's something to basically predict how long it would take them to get EV cars from costing $50,000 to $20,000 and under. So in the data, it was saying that in 5 years, that if I'm not mistaken, I can definitely fact check this.
That's it.
In 5 years, that they gonna start the EVs gonna be starting to cost under $30,000.
Oh yeah. That's definitely possible. Because Tesla only 37, so
exactly.
That's easy for sure.
Exactly, and then that's gonna be with all the fleets, and then even more time after that, then they can get it down to 15,000.
Right, and there's gonna be a lot of used EVs out there too.
Yeah, and they're gonna even get to the point where they cost cheaper than the gas cars.
Hey, and when that happens, that's when EV gonna take over, man. It ain't gonna be like man, these EV companies is making them go further and charge faster every year. Like
that's a backdrop.
Supercharge on the Tesla, like it's an update that can make your car charge faster. Like like Elon Musk is so smart for that. Like he don't gotta sell new cars or nothing like that. All he gotta do is send you the update and your car is updated. Like your car can charge faster and stuff like that and go more miles. Like that's huge right there. Like,
and that's why Tesla an asset. No cap. Tesla
man, definitely is. They talking about that Uber, that Uber Tesla.
Yeah.
Linking up or something like that. They about to be.
So your car can do Uber while you at work.
Ride share.
Bruh, they go
Yeah, your
your
car
car
just
gonna
dropping
be in.
itself. Like,
Yes, to drive itself and make you money while you at work, bro. They predicting that you can make an extra 12 to 15K a year off of that when that comes
man,
to
for
fruition.
real.
Yeah, I mean, that's an
Real.
asset, bro. And then even if you buy a Tesla today, your car's gonna get that update when it come out. So
Right. And
you ain't
it's
missing
not
nothing.
gonna lose as much value because updates like that. Like if you bought a Tesla like 3 years ago for like
Get in the
$40,000
game,
and the
bro.
price of that same Tesla is 30,000, your Tesla is still worth around 40,000 because of the updates. Like he had added the full self-driving. 3 years ago, it was just $3,000. Now it costs $10,000 to get full self-driving. So that right there already made your car worth probably more than what you even bought it for, honestly.
Leveling
Like
up, bro.
so, yeah, man, them updates
Asset.
it's crazy with Tesla, man.
And since we on the topic, bro, Tesla not depreciate like all these other cars. Period.
Definitely don't.
That
Like I feel
alone.
like that car out of all cars. Well, no, I don't really know it like McLarens and all that, but
Oh yeah, they hold
that
value too.
car
They
out of
actually
other cars really don't depreciate like for real.
yeah, but like any regular car, as soon as you drive it off the lot, you probably lose a fat amount of what that
Yeah,
car.
yeah, yeah.
You
You
take
for
it back
sure
the
lose
next
like
day,
5 to
not getting the same.
25% as soon as you drive it off
You
the
know what I
lot.
mean?
Like,
But with a Tesla, bro, Tesla hold its value. Like
man, they say the battery can go a million miles. A million miles. Like
that's crazy. Before you
take
gotta
10
buy a
years
new
until you
battery.
gotta go get it checked and looked at. Like 10
Yeah,
years minimum. Like
man.
go get a little checkup. Like all you
Yeah,
need is windshield wiper fluid.
Tesla
Like,
definitely hold their value, bro. Like
man.
when I was in the market looking for a Tesla, like a year, like that was like 2, 3 years ago. I was looking to get a Tesla, and I was like looking at the used ones and all that, bruh. In 2015 was only like 5 bands, if that, cheaper than a brand new one.
Yeah, 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 definitely.
Like
Uh-huh.
what, bro?
Yeah,
It's like 3 years old and it's still only down like 5 bands.
yeah.
What is that? Ain't no regular car doing that.
And now it's probably way more. Like if you would have go ahead and pulled that plug back then, it probably would have been more by then.
I'm telling you,
To
for
think about it
real.
with the full self-driving and all the updates, it really ain't
Yes,
losing no value. If it
yes,
only got a few couple thousand miles on it, you know what I'm saying?
yeah,
Like
yeah,
that's really not losing value with an electric car.
yeah. Imagine going to go buy like a lack off the lot, or not even a lack, man. It could be any car, bruh. It's not 3 years later only gonna be $5,000 cheaper.
Yeah, yeah,
Bro, that car gonna
definitely.
be down like 20 bands.
Man, for
10
real. And
bands,
that's
50
if
bands.
you kept it up. If you didn't smoke inside of it, if you got your oil changed every month, you know what
Yeah,
I'm saying? If everything was just solid, the everything, like when it comes to the car, like
yeah,
that's
yeah.
if you did kept that up. Like
Yeah, we're going
you
on a
put a little
tangent,
dent
man.
in it,
We're
that's
going on a
gonna make the
tangent about
value go
Tesla.
down right there. But yeah, we're gonna
Hey,
save
we
all that
going good
personal
on Tesla.
finance and stuff for Sunday, man.
Yeah, man. Yeah.
Talk about all that on Sunday.
Yeah, man. Hey, man. Appreciate everybody that tapped in, man. Like that video for you to get up out of here.
Yeah, though.
Watch it. You know what I mean? Appreciate communicating in the chat, man. Asking questions, man. We
Yeah,
answer
yeah. Thanks for the questions, bro.
for sure, man. We gonna come live to y'all again on Sunday. You know what I mean? It's gonna be on Instagram. So make sure y'all follow the Instagram page at Stock Plug Investments. Go ahead, tap into that, follow that page. We're gonna give y'all some daily information, post and all that about the market, man. Even about financial information, man, because this is a journey, bruh. This is
Yeah,
a journey, man. We realize that we can't just teach y'all the stock market. We gotta also show how can you afford to put money in the stock market, what you need to do so you can have some free
yeah.
cash.
You ain't gotta be rich. You do
Yeah,
not
you
gotta be
don't.
rich to be an investor. You could be a
You
regular
don't.
9 to 5 and be
Yes.
an investor. Like,
You can keep your job and invest on the side. You know what I mean?
yeah,
Like we're gonna give all that game throughout, through this journey with us, man. Rock with us, man. We definitely gonna get a game. We definitely gonna get a game, and it's gonna be free. And You welcome, big dog. 'Cause a
Right.
lot of people pay for this information, man. I'm telling
Yeah,
you,
for
man.
real,
A
man.
lot of people
For
pay for
real.
this information, man. You got the quote of the day ready for him, big dog?
Yeah, let me pull it up, man.
Yeah, hit him with
Got the
that, King.
Warren Buffett, man, to end it off with this crazy market right now.
Oh yeah.
Got it right here. It say Warren Buffett once said, "Be fearful when others are greedy, and greedy only when others are fearful. Never get greedy. Only do it when others are fearful." So right now it's a lot of fear in the market. I ain't gonna say go throw all your money in there. You definitely average down like we were saying, but look more into it. Like
Yeah.
like
We
like
showed y'all. We showed y'all
yeah,
that we
when the market
greedy.
is down, that's when it's on sale, man.
Yeah. We
That's
buy
when you
when
be
blood is in
greedy.
the street. You know what I
Yeah,
mean? Yeah, I mean, when it's real, that's when you want to be ready. You know what I
yeah.
mean? Have some buying power to save for a rainy day. That rainy day is coming. It's
And
coming. You see the market.
be fearful when others are greedy. People was just greedy 2 months ago when the
Yeah.
stock market was running up, Dogecoin and everything
Bitcoin.
running up. That's when you be fearful. Like
Yeah.
you don't wanna hop in the same stock that a million other people is hopping in when it's already overvalued. I
Yes.
never do that. Like that's when
Buy
you
that
get
room.
fearful. Like if you do believe in a company, then definitely don't throw all your cheese in there. Just throw a little bit in there. You know what I'm saying? Always keep that in mind. Be
Yep.
fearful when others are greedy, man.
Yeah. And just like the definition said about a market crash, it can happen off speculation.
Yeah,
So if this fear meter get too low and people just really start panicking,
yeah,
bro, that could really cause that alone could cause the crash.
yeah.
So just make sure, you know what I mean, put some money on Tuck, hold that until it's time to really start catching the big sales.
Mm-hmm.
I mean, it's been some sales going on the past 2 weeks, but we waiting for that big sale, like
Yeah.
March of last year sale.
For
You know
real,
what
for
I mean?
real. I want Tesla to go under 500.
Oh yeah, it's definitely. I was charting that, bro. I see Tesla going to 450.
Yeah, we
Tom
gotta see what's
standing me on
going
that.
on, man.
Tom standing me on
Tesla.
that. I said it 5/12/2021 that Tesla going under 450, man. I don't know when, but it's gonna happen, man. All my words, man. I ain't saying it's gonna happen tomorrow. I ain't saying next week or this year. But watch when it happen, I'm gonna tell you. Like I told you. All
Yeah.
right, bet, man. Hey, man.
But
Appreciate
yeah,
it.
that's the quote of the day, man. If y'all missed anything, y'all can rewind the video, go watch our old videos, and we're gonna be here on Sunday, man.